Hey everyone, Dan here. We are after market close on Friday, July 16th. We're going to take our daily look at SoFi. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind, these are my thoughts, opinions, ideas. They are not investment or trading advice. You should do your own due diligence. Take all of the info that you have available to you all across the internet and decide what works best for you based on your own strategies, risk to reward ratio, etc. Okay, so SoFi, as I think I try to do a good job of warning about yesterday. Don't get too excited about one nice green day. We saw that come home to roost today on this negative 4.32% day. So pretty brutal one out there as SoFi continues to sell off over the past month. Volume down a little bit, but still relatively high for a Friday. Not a bad showing volume-wise. Unfortunately, it was red volume. And of course, yesterday in the video, if you didn't catch it or if you did, I had laid out a short-term trading strategy that I was looking at, which obviously I did not take a short-term position. My criteria that I had pointed out then was that it should follow this green trend line up. It should establish support at 1636, and then I would either take a position there or I'd wait to see what it did in the red box and take a position after that. Now, obviously, it rejected off of 1636. Let's see exactly where it got. It got pretty darn on the nose there during the pre-markets, right at 6 a.m. But obviously then it was just in free fall most of the day. Tried to briefly get support there. It looked like a nice double bottom, to be honest, at 1539, that 786 retracement level, but it just did not matter and continued to roll down. Now, a couple of updates that I would do to the chart here. I think that these levels that we have set right here are still holding really well. Unfortunately, they're all holding to the downside, but this downtrend line, I think we have a better one forming now that we have this 1522 lower points that has come in. So we take from this area straight through to about here. Now, obviously, we're going to see if it can come down and test that area, but I would be keeping a strong eye on this area for a downtrend support line. I kind of want to see if this, whoa, crazy chart. I kind of want to see if this extends back to the low up here or not. No. Okay, so we're just pulling in this most recent activity that started in the pre-market on the 8th of July. But, this is just the reality of what we have at the moment, to be honest. There's not much to really say here other than, from a volume perspective, obviously you can see here we had a lower volume today than we had the last few days. And we're essentially staring down the barrel of either getting support at this 1539 zone, or I think we then strongly run the risk of working ourselves toward this 14 level, which would be a complete retracement of, I've talked a lot previously about this 1414 price zone where it ran up to then 2549 because, we're talking about sort of the squeeze that was happening then and sort of like in conjunction with all of the hype as it was leading up to the merger date finally coming through. So we would essentially see a full retracement of that, and then if it can't hold that 14 level, which again, this isn't me saying that it won't, but just if it can't, I would then suspect that, we're running the risk of, something around a $12 level there, coming down near that 1189, which would be 100% retracement of this initial run up, 28-26 that started at 1189, and it would have gone through all of this wonkiness just to get all the way back there. So that's just, again, from a trying to be realistic perspective, this is just the trend that we're in. I guess the other thing that we could take a look at here that I haven't tried yet, but we might as well see if we are in some sort of a channel that we could identify. Not really. It's more of just these sort of varying like levels of like degrees of steepness of downtrend. So not really in a channel from this last month downtrend. It's more just, keeping this downtrend support line alive. And then just having some sort of like brief blips on the radar where you see like, a bit of a run up here, a bit of a run up here. But then obviously these sell-offs have just always come very, very quick. The most recent one then here. But then we see, this one lasted from 6:28. It started toward the afternoon hours, but then that fully retraced by 7:1. So just, give it 3 trading days and all of those gains are gone. Obviously today was just 1 trading day and all of those gains plus some are gone. So interestingly enough, I do want to see something on the daily here. So if we look at the daily, we just zoom into the most recent few days. So if we look here, 7-8 was a green day and 7-15 was a green day. Look at the order flow. You see this? There were no, apparently, there were no large outflows today. And yet we had this huge, 4+% loss. Yet there was almost 3% inflow. And even then, large medium inflow, but, large medium outflow as well. So these were obviously much more on track with each other, the small and the medium orders. But, the inflow outpacing the outflow by 2.1. So, I'm going to have to look more into this. It seems like an odd divergence to me. Our largest green area of large-scale orders in the last 5 days, which I think is just all of days. I think before this there were a bunch of just no large order days, or a bunch of just red large order days. And so, having the highest inflow of large-scale orders, and no large outflow, something seems a bit odd to me. I don't know what, but it does seem bizarre. And then, these were also red days. What was the other day that had some inflow? So 7-15 and 7-13. 7-15 right here, so that resulted in a green day. And what did I say, 7-13? So that was a red day also. So, I don't know if some of these institutions just sort of like had buy zones on their radar, and these sort of like buys are just getting hit by the falling price. I don't know why then there would be this random like large outflow day, relatively speaking, large outflow day on the 14th, which is right here. Just if it then, the next 2 days hit big buy orders. I don't know, but there's something there to look into. Today is sort of going to be a little bit of a mishmash of, here's kind of where we're landing at the end of this week, and here's things that I need to look into additionally, because there's just a bunch of weird stuff out there, and so it just is going to take more time to dig through than I had today. So there'll be more to come next week. Luckily, the weekend will be a nice reprieve from the daily videos that'll give me time to do some due diligence work and try to sort some stuff out. Now, on the short-term side of things, we do see here on the 5-minute chart, well, let me just go to the 1-day chart. It'll just be easier. You do see a bunch of bottoming out here. So I would be interested to see, regardless of how we hold up here in the after hours, if this zone can continue to provide a bunch of bounce potential, I would be really interested to see not even a bunch of bounce potential, but just a large area of demand. I would be interested to see if that continues through Monday of next week. Could that give us a lift to get back over this 786? I would really, this is sort of like my short-term trading brain thinking, I would really like to not see us do 100% retracement to get down toward 14. 100% retracements are always so sad to me, to have gone this entire way just to fall back to the same level at that 1403 area. But, obviously it could happen, but, I do think the best hope at the moment is that frequent bottoming out that we saw sort of taking place at the end of the day, where it was just refusing to get lower, even though it tested it 3 times, and now again in the after hours, take that for what it's worth. But that is what I'm going to be looking at. I don't think that we're going to get a lot from looking at the indicators, so let's not lengthen the video by doing that. Now let me talk about some things that I'm going to be looking into that just seem a bit odd to me. One of them is here. Now, the Ortex is showing, don't pay much attention to this because they just started pulling in the short interest data, and so they're still showing basically a non-existent percentage of the free float with short interest. So don't worry that this says plus 27. That's nothing. But what is interesting to me is this days to cover coming down so significantly. Now looking like it's just 0.18 days to cover, and the utilization coming up to 18%, down from 27, but that still seems odd to me that the days to cover is so low, and that the utilization is seems relatively high to me based on the percentage of the free float being so low as a percentage of short interest. So I need to look more into that. Could be nothing, but I just wanted to point out it seems like an anomaly to me. Part of that could be the huge insider. Is this the one that I have? The huge number of insiders that are holding this, because this is a recently to market company. There's not a lot of institutions yet bought into it that are consuming the free float. So it could be partially because of that, but again, meaning that's why the utilization is so high. But I don't know. It still seems odd to me, as does the 0.18 days to cover. Now, I'll have to also cross-reference this with some other sort of like tools to make sure that the data is correct. So more to come on that. Now, the other thing that I want to look at, which I briefly spoke about yesterday, is the fails to deliver from, what was it, the last half of June? Is that the right date? Yeah. The last half of June. Like, these are insane numbers. Almost 10 million fails to deliver that had accumulated by June 28th. And then still over 7 million come June 29th. You just see this huge run up of fails to deliver accumulating in the entire second half of the month. And so why that is obviously an interesting question to me. Now, part of the reason that we want to know this is because we know that these fails become aged fails after 30 days, which would mean 30 days after, any of these time frames could bring some buying pressure if folks need to find shares in order to deliver them to people who they previously sold those shares to. But a lot of the questions that I have now are surrounding dark pools. So let's first just sort of put to bed one area of contention around fails to deliver. So this is from the SEC site. And they're saying here, fails to deliver on a given day are a cumulative number of all fails outstanding until that day, plus new fails that occur that day, less fails that settle that day. So it's the net fails on that day, plus bring in any that are still not settled that existed prior to that day. The figure is not a daily amount of fails, but a combined figure that includes both new fails on the reporting day as well as existing fails. So I know sometimes folks will go in and they will add up all of these fails, or maybe it's easier to look at it here. They'll go in and they'll add up all of these fails and be like, oh my God, there's 23 million fails. I don't know how many, I don't know what that adds up to, but we need to keep in mind that that is not the case, that these are cumulative numbers that account for that day, the net on that day, plus ones that were not previously settled that have failed. Okay, so cumulative number, which brings some opacity to all of this, of course. Now, dark pools, if you're not familiar, are private exchanges for trading securities that are not accessible to the investing public. They were created in order to facilitate block trading by institutional investors that do not wish to impact the markets with their large orders and obtain adverse prices for their trades. So think of this in terms of like XYZ institution wants to buy 100 million shares, that's way too many, but wants to buy 10 million shares of any stock, okay? But they don't want to do it on the open market because they think that it's likely that if an order of 10 million shares comes out, all of a sudden that price is just going to skyrocket up because they're going to have to keep sort of hitting the ask to get those shares through the door. So they'll put it on a dark pool exchange as a block trade and say we need these 10 million. And this way it won't be registered on the chart that you and I look at and try to decipher the price activity day in and day out, minute by minute, what have you. So there were 59 registered, the SEC calls them alternative trading systems, which we know as dark pools. As of May 2021, there were 59 registered ATSs. So there's a lot of different dark pools out there. And, I've been digging through SEC documents here, talking about these ATSs and sort of some of the, bad things can happen in the dark. This is the SEC's website, and sort of reading some of the issues that have come up and fines that have been levied and things like that, bad actors that have done things that they shouldn't be doing. In 2011, the Commission brought an enforcement action against one dark pool operator for falsely advertising that no proprietary trading took place in his dark pool. In reality, one of the operator's affiliates not only engaged in proprietary trading in the pool, but it also secretly enjoyed unfair informational advantages, which it used to front-run subscribers' trades. So, I'm unpacking a bunch of this, and the reason that I'm interested is sort of twofold. Well, no, I'll focus on one thing. I'm mostly interested in this because, and if anyone knows the answer to this and can provide a link to a source, I would appreciate it because I'm just starting to look into this. But I know that previously we were looking at the likelihood of fails to deliver driving up running up the price of a stock, because if they were naked short selling, and that's why they were failing to deliver the stock, because they didn't have one to sell in the first place, and then they're having to go on the open market to purchase those shares in order to deliver them, that would run up the price because there would be, potentially millions of shares on any given date needing to be purchased in order to be delivered before this 30-day aged fail situation. They occur 30 days after the trade date. But a question arose, to me that, well, if they were to go on, if they did have a large enough block of shares that they wanted or needed, and they were to just go into a dark pool to purchase them, what's stopping them from doing that in an ATS and purchasing up the shares that they need to cover, and then not to cover, that's short selling is covering. I don't want to conflate these terms. To deliver, okay? So let's say agent XYZ owes 1 million shares to a seller or to a slew of sellers that they sold but they didn't have shares for, and they need to deliver them within 30 days. That 30 days is coming up. What's stopping them from putting a block buy on a dark pool for 1 million, thus not impacting the public markets, so not running up the price, even though there was 1 million shares just purchased, and then coming on and delivering them, which also wouldn't reflect in any way, shape, or form in the marketplace, which is correct. It shouldn't, at least like for the share price. What's preventing them from doing that? Thus, never, running the price up by having to deal with securing shares to deliver on those soon-to-be aged fails. So I'm going to be digging in really deep to that. I'm also going to be grabbing additional tools that will cost money, but so be it, that should give some additional insight into the dark pools and what's happening there. That might give us some additional data points to sort of mix in with the things that we already do have available to us, like this, that we are aware of, and then sort of be able to track some of the block trades that are running through the dark pools and see if there is any matching up of fails to deliver, aged fails, and dark pool activity. But that will be coming up in several days, probably not Monday, probably not Tuesday, but in the later half of next week, I hope to have sort of some interesting answers on that. All right, well, I think that will do it for this video. If you haven't signed up for the email list yet, that's a free email list that will be starting in August. So once or twice a week is all that I'm going to send, so I won't annihilate your inbox. But it'll be additional trade ideas, quick charts that I can get out the door with sort of entry exit points that I see for potential trades and that sort of thing, that I just don't have time to make videos on. So if you would like to be on that list, the link is in the description. You can click that there. And yeah, there's a lot of questions about how to roll out videos moving forward in the future as the channel evolves. So there's a poll out soon. If not yet, it will be out this weekend, sort of asking some of these questions, what folks enjoy, what folks don't enjoy, some alternative sort of video setups that we could have in order to sort of appeal to the wide range of folks that enjoy longer form things, and then a lot of folks who don't enjoy longer form things. So look for that over the weekend as well. I'd love to kind of hear your opinion and be able to sort of have your voice heard, have your poll vote counted, or what have you. All right, well, I hope everyone has an enjoyable weekend. Please catch up on my recent SoFi videos if you haven't yet, talking about trading versus investing. That's the I think that's the Real Talk video. Also the what to look for with SoFi earnings coming up. I'll be doing another video on that coming up before earnings. And yeah, that'll do it for this one. But thanks a bunch for watching. I appreciate it, and I will see you in the next video.